Welcome everyone. This is Manesh Patel with Valetax. Today is the second part of a workshop at Elliott Wave. Hopefully you guys were able to join the first part where we began the introduction to Elliott Wave analysis. Elliott Wave is not something easy to understand. It's a pretty much a very complex situation where you look through wave theories and stuff like that. We'll go for an overview of what we discussed in the first workshop, and then we'll begin going through the second part of the workshop. Um, as you know, we've been having these workshops, two workshops a month. We also have our Telegram chat room. You can see the barcode to the top right-hand corner. If you have not already joined us, please join us there. Please pass it to other people too to join. In that chat room, we're actually taking the concepts that we go through the workshops, use them on real life trades for the currency market and crypto market. We're also taking our AI forecasting tool and putting out what has high probability to move the following week. And then we're showing you exactly how you could look for trades with the concepts that we've been doing through the workshops. The last couple of weeks, you could see from the history there that we've been doing really good with the forecast and things have been moving. This week's forecast was basically the Swiss yen that did move on Monday, as we talked about, and gave an average about 80 to 100 pips or so, which is really good. So please join us there and so forth. The rest of this month, next workshop's gonna be on moving averages, famous moving averages that people use. We're gonna take moving averages, go for the concept of that, which is the most popular trading system out there. But we're going to incorporate money management and then also the real bar concept to moving averages to help you increase your reward risk and also to increase your win-loss ratio. Next month is going to be the most exciting month. That's where we actually begin Ichimoku, which is my specialty. You probably heard of it as cloud trading. It's very easy to do, and that pretty much is the premises of everything I do as a professional trader. Ichimoku is used in the institutional world and also retail world too. So February will be pretty much the beginning of Ichimoku, where we'll go through all the different aspects of Ichimoku and show you all that system in its entirety, show you the strengths and weaknesses and so forth. Okay, so let's begin. Elliott Wave. This is the second part we mentioned. And so let's begin. Elliott Wave is pretty much taking Fibonacci and put it into waveforms. So you're looking at these waves and you're making sure that these waves have a Fibonacci relationship attached to them. Okay. And that's where you take, it works really, really well. So you look at these wave patterns that have Fibonacci relationships. So Elliott wave is just a glorified form of taking Fibonacci and put it into these waveforms. So it's enhancements for Fibonacci. So let's go through what we discussed last time in the workshop. Pretty much the base here is wave one. Wave one here is pretty much everything that's been happening for wave one is a consolidation pattern majority of the times. Okay. Then what happens? You pull back. This pullback here is not a Fibonacci relationship at all. It could pretty much come and retest this low here, could fall short. It doesn't matter. So there's no relationship here. All you know is that it's consolidating from wave one to wave two, and then all of a sudden it breaks out of the consolidation pattern. So when you break this little pivot here, you're breaking out of that consolidation pattern, and now you're making a huge move up. Okay. This is called the institutional way. A lot of times, a lot of retail traders don't recognize this at all. And the reason why is that they're not looking at it because the previous pattern here was a consolidation pattern to a point a lot of retail traders don't look at it at all. Only time they look at it is once this move starts happening, and three-fourths into the institutional move is when retail traders start to notice it. This is where this right here, if you take in any Elliott Wave courses, most people will not teach you how to trade the 2 to 3 wave, the 3 wave here, because it's hard to recognize. However, we will show you how to trade that when we get into Ichimoku, because Ichimoku specializes in recognizing this consolidation breakout and trading the wave three, which most people don't know how to do. Okay. So this is the institutional wave. You're breaking out of a consolidation pattern here. And now this is going up, 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 up. And typically retail people start noticing here where majority of the move is already pretty much gone. 75% of the movement's already gone. So there's limited reward. Okay. So this is why most Elliott Wave technicians won't teach you how to trade the 2 to 3 wave. Okay. So you're recognizing this going up, 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 up. And then all of a sudden profit taking starts to occur. This profit taking here is the 3 to 4 wave. The 4 wave here, this is typically a Fibonacci relationship. So this is 50% or 61.8. Okay. And then you're trading the 4 to 5 wave. So if you're taking any Elliott Wave courses, their specialty is recognizing the wave pattern and then pretty much trading the 4 to 5 wave there. Okay. And that is the goal here. That's what they're going to be teaching you how to trade. So here, the goal is to recognize the wave three pattern. And then once the profit starts to occur, you want to make sure that stops at 50% or 61.8. If it does, now there's a buying opportunity here. And that's what you're looking for. Once you get in, now the question is how much reward? The reward could stop here, retesting this high. It could stop a little short of it, or it could go up to here, breaking this high by a little percent, and then, or it could keep on going higher. And in the first workshop, we talked about this here. If this goes to 127% retracement, then what happens is, and stops, then this is not going to sit there and keep on going for long term at all. If this breaks the 127%, this is going to go up huge. So that boundary condition is pretty much 127%, not 100%, which is retesting this pivot here. So typically price goes up another 27% from this high here, and then the big decision is going to be made. Is it going to stop and reverse, or is it going to keep on going? So that 127% is very, very critical, because if it breaks it, now you're going to keep on going for a long, long time. And actually, this whole wave pattern could redraw. But if you stop at the 127%, you now could sit there and go down and reverse. And this whole wave pattern here, you could retrace it all. So we're going to look at that scenario in just a couple of moments. But just to refresh here, our first workshop, wave two here, it cannot close below the baseline here at all. Okay. Wave three, which is this here, this is the institutional wave, can only occur after 127%. Okay. And the reason why is if this comes here, right there, and stops at 127%, it's not the institutional wave. When you break the 127%, now you know this is the institutional wave. So this wave pattern here broke the 127% and keeps on going, and that tells you it's an institutional wave. Okay, and then wave four, as we talked about, has to stop at 50% or 61.8% here, and then here, that pretty much completes the wave pattern here. Now, the second half of the wave pattern, this is where it gets very, very confusing. This is where a lot of people charge a lot of money to go through this scenario. So I'm going to give you what the technical descriptions are, but I'm going to then apply my experience to it in just a moment. So once the wave pattern is done, then typically you get an A, B, C pattern. You get an A pattern here, B pattern here, and then C pattern here. And that typically is the pattern that you're going to see. Okay. And what happens is after the five wave, either this is going to consolidate, okay, or it's going to start a trend reversal. So what it could be is a complete reversal where this could go down. Okay. And that's the confusing part of everything here for the second part, and why we basically separate this out into two separate workshops. The very first workshop, you should be concentrating on recognizing this pattern and then trading the 4 to 5 wave because that's the high probability scenario and that's where the money is. The second part is very confusing and you could tell because you don't know when you establish a top or bottom that it's going to consolidate or reverse. And that's what Elliott Wave is supposed to do is to help you recognize that. So here, if you look at all the technical books and courses and stuff like that, a lot of people will not teach you how to trade the ABC pattern. However, you do need to know that because this could, instead of consolidating, it can turn into a full-blown trend reversal, which is what we're looking for. And the way I would look at it is completely different, which I'll go through in a minute. So the ABC pattern here could either lead into a consolidation pattern or it could lead into another wave pattern starting, which it could be a bullish one here where you start another 1, 2, 3, 4, 5 going up, or you could start at 1, 2, 3, 4, 5 going down. Okay. And typically this will lead into a bearish Elliott wave 1, 2, 3, 4, 5, or it could lead into a consolidation pattern. Okay. So now let me bring in my experience. Trading an ABC pattern for a consolidation pattern is not something you want to do because the price is going to go up and down. You're going to make money, lose money, make money, lose money to a point. The psychology of trading is going to come into play and you're going to get frustrated. So you don't want to do that at all. What I trade and look for is a reversal. Okay. So this is going to be a top here, or it could be a bottom for bear scenario. And now what you're looking for is, I'm not looking for this to be ABC pattern. I'm actually looking for a reversal of this Elliott wave pattern. So I want this to be a 1, 2, and 3. And that's what I'm looking for is a reverse Elliott wave pattern for me to trade. Okay. So let's go through that with you. Okay. Do you guys have any questions here before we go to a live chart? No? Okay. So I'm actually going to change and go to a live chart. So bear with me. Here's trading view here. Hopefully you guys could see it. Okay. And you could see here, we got the pound CAD. This is daily time frame. And all I did was add the free Elliott Wave indicator on TradingView. If you don't know how to get there, click on indicators, go to technical, go to patterns, and then there's Elliott Wave right there. You don't need to spend money and going out buying all these sophisticated Elliott Wave tools and stuff like that there. And they're all different. They have different formulas for the patterns, and they'll redraw these patterns. 1 minute, this will look like a 5. Next minute, a couple of days later, it may look like an ABC pattern and stuff like that. So you really don't need to do any of that scenario at all. Okay. What you need to do is just take the software and use the concepts there. So if you look at it here, as soon as I apply the indicator, it shows me that this already is an Elliott wave pattern. Okay, if you look here, this is a wave 1, this is a 2. Notice the 2 did not close below the baseline of the 1, which is good. Then you have the big institutional wave here. It got past 127%. So that's why that's institutional here. This is pulled back here. And now you have an Elliott wave here, 5. Okay. Now, in order to make sure that this ABC pattern here that you see that it's drawing is not going to turn into a consolidation pattern and turn into a trend reversal, I need to do a couple of things. And these are rules that I have based on my trading experience. So I'm going to come out here and I'm going to draw the tool here and I want to see where wave 5 stopped here. So wave 5 here stopped here. And the key thing here is recognizing the 127%, which is right there. Okay. So it did not get past the 127 at all. It fell short of that. Now, if it got past the 127%, then basically I'm not going to look at this ABC pattern as a trend reversal. I'm going to look at it as a consolidation pattern. Okay. If it stops at 127 or below it, which it did in this scenario here, now I could look at a reversal. And the reason why is that if it doesn't break the 127%, then you know institutions are still not buying it or selling it. If it falls short right there, this almost looks like a distorted double top, which a lot of people are looking at. So now I'm looking at this here. It comes down, okay? And then, and when it comes down here, I don't want it to break where the four pattern is. I want it to fall short. So it comes here. This is your one. This is your two. And you could draw your Elliott wave here, Fibonacci here. And you could see here that the two here stopped exactly at 61.8. So it's a perfect scenario right there. Okay. So now your two is there. And now what I want is now I can start thinking bearish here and to trade this going down and become a Elliott wave 3. So in theory, even though this says ABC, I'm looking at this to be a 1, okay? Then I want this to be a 2, okay? Oops, it didn't change. Ah, there we go, okay? And then if you notice, if this stops here, okay, the key thing here is I draw this here and I draw it out here. I have to see where the 127% is, okay? And that will be roughly here, which is pretty much at this pivot low right there, okay? So this works out perfectly here. So this is the 127% here. And if it breaks that level, okay, which is pretty much the 4 base here, and let me draw this out. Here, now I have a potential of coming to here, right there. So this will draw in just a moment. There we go. So this is going to be very critical here. I could play the 2 to 3 wave here, okay? Because you have a Fibonacci relationship here. Sometimes you do, sometimes you don't. If you have that Fibonacci relationship, now you could trade this here. The key thing here is that when it gets to 100%, it's testing this 4 here. You need to make sure it gets to 127, sorry, when it gets to 127%, it's right here, which is pretty much retesting that 4. In order for this to be an institutional wave, you have to break that 127%. That means you have to break this here. Once you break it, now you know that this is a true institutional wave, and this could go down a lot more. In fact, that 3 wave, believe it or not, could come very close to this 2 wave here. Okay. And that's what you're looking for here is in theory, you want that to be right here. So if you draw out this pattern here, and what I'm looking to do is this is my 1 to 2. 2 to 3, and then 3 wave will come somewhere right here, which is retesting this right there. Okay. And then if I draw the relationships in here, where I want this to retrace 50% or 61.8, that pretty much will take me 3 to 4 here. Let's give it worst case scenario right there, or just do it right there, 50%. That'll be a 4, and then your 5 here to come and break this here. So this is a lot of information to absorb, but you could go for the recording and you could trace through this here. So this is my forecast for this instrument here of this completely reversing into a bearish Elliott wave pattern. Okay. Just taking this here. Sorry about that. It doesn't want to cooperate. Okay. There we go. So this is what I'm predicting here on the wave pattern here. The only way this is going to happen is that I have to break this level here, which is 127%. Once I break that level, I'll also be below this 4 wave here, which is critical. So to start the reversal, full-blown reversal here, and completely declare this as a top, you have to break the 127% here, and you have to break this baseline of 4 here. You do that, this is going to reverse completely. And your probabilities, if you do break this 127 in this baseline here, you have high probability to retest this whole entire low here, which is huge. Because if you look at the number of pips that you have from here to here, that's 1,000 pips. Okay. So this is your forecast here for this. So this is a real live trade I'm looking at now where my forecast for the pound CAD long term is bearish. Okay. So I'm looking to trade it to this level here. Then I'm looking to take some profit at this point here and then wait and see what happens. If it breaks this here, this is going to go long term bearish. Okay. And that's what I'm looking at here. So let me delete this stuff here. So now what you could do is you could sit there with your trading system, start looking for bearish trades here, long term to come down. If you want to look at the real bar, fake bar concepts here, I have one red bearish bar right now. And remember, you need 2 bearish bars where each week, each day you close below the previous bar low. You have one. Today was critical. If today closes below yesterday's low, now we're going to have 2 bearish bars in a row to start the bearish trend. So actually have a breakout order here below this daily low here. Doesn't look like it's triggering right now, but we'll wait and see what happens at the end of the day because the US market still has to open up. But if this closes below the previous bar low, this is now a long-term trend where now you could trade this going all the way to here and you target this around 300 pips or so. So this is a 300 pip target for this move here, which is pretty much trading the 2 to 3 wave to this level here, which is 127%. Any questions on that? It's a lot, I understand, but this is something that, some people prefer to do, some people don't. But the key thing here is that it actually helps you forecast what's going on. Any questions? So this is a good one here to look at here. Um, So here's one here, and let's go through this one here. So this is something, if the tool pops up, you're going to have this scenario in here. Okay. And this looks extremely weird. Okay. And this does not make sense. Reason why is this A pattern here, the way the software drew this is this A pattern is already broken the 4, and that can't happen. Okay. The A has to happen here. B has to happen here. And C is what attempts to break this 4 here. So if you're looking at something like this, I would not believe this at all. Okay. And believe this scenario in the Elliott, how it's drawn everything at all. Okay. And if you look backwards here, the software here is labeling this to be a 5 wave here. And if you look here and look at this here, you can see from 3 to 4 here, this got past the 127 here, right there, right here. So when this 5 wave finishes, it can't give you an ABC pattern to reverse at all. And you could see that it didn't do that and it's just consolidating. So this is an opportunity here. This is just consolidating right now. And it all happened because the price did not stop here at the 127%, and the 5 is way up here when it should be here. And so what's going to happen is eventually this consolidation pattern will keep on going, and this whole pattern here, the software will redraw it. Okay. So you have to make sure that when you look at the software drawing these patterns, they make sense. And I will look backwards here at the 3 to 5 wave and make sure this 5 wave here is below the 127. If it is equal or below, then you could have an ABC pattern that goes into a full-blown trend reversal. Any questions? No? So this software, you could pretty much apply it to anything. You can go down to lower time frames. You've probably seen gold and silver. Silver has been up moved huge than gold. So you can look here. This is drawing it here. This does not make sense how it's drawing it here. And the reason why is if you go from 2 to 3 here, this stopped at the 38.2%. If it stops at 38.2, this is still the 3 wave going up. So this is a perfect opportunity here when it stopped here to start looking for bullish trades from this point on, because it stopped at 38.2. So when this is drawing this here, I'm not really paying attention to 3 to 4 because this stopped at 38.2. The only way it could be a 4 is it does a 50% or 61.8. So to me, this is still a 3 wave going all the way up. Okay. Not a 3 wave that's ended. This is still the institutional wave that's going, going, going. And if you go to the weekly, you could probably clear it up. And here, this is not making sense either because this 3 wave is just this 4 wave here is a small percentage. So you could see that the drawing is completely, completely wrong here on every aspect here. And look here, let's see if it makes sense on me over here. And let's draw the Fibonacci retracements here, from here to here. And I don't know why it's doing that. Give me 1 second. And remember, I'm validating the way they draw based on the rules we have. And if you look at it here, this is close right here. Uh, not quite. You can't see here. This actually stops at 38.2. So they're drawing a 4 at 38.2, which is wrong. This is still the institutional wave going up, up, up. And you can see it's still going on. So gold and silver right now on the higher time frames, you really can't depend on the way they're drawing the patterns at all. If you go down to a 4 hour, you could look to see if they're validating there, here correctly. And we could just do that tool here. Here, you could see also stopped. This one here stopped at 50%. So this is being accurate right now. So here on the 4 hours, the first time frame that you found accuracy, whereas daily and weekly, you really don't. Now it's saying the 5 wave is there. Let's see if this is really going to be a reversal or not. And all you have to do is come down here and draw the levels here, and you could see that it's at the 150%. So there's no way at all this is going to reverse right now. If it stopped at 127%, which is right here, that and stopped and then started going down, then I could understand gold now reversing on a 4 hour. But since it broke that and at the 150%, this thing's going to consolidate or keep on going up. So right now you could see based on the Elliott Wave pattern here that the 4 hour is controlling gold going up. It's not the daily, it's not the weekly, multi or anything. The highest time frame that's controlling this is the 4 hour because you're actually drawing good Elliott Wave patterns there. Does everyone have any questions? There was a question, any Pacific T1 time frame? Well, I would always start on the higher time frames first. You notice I would start on the weekly to see if the drawings make sense. Okay. And then if it doesn't, then I'll go down lower and lower until I find the time frame as I did here. Now, why do I start higher time frames? Well, remember, Elliott Wave is a lot for forecasting. So it's more long term than short term. Okay. And so you want to use a forecasting tool like Elliott Wave on higher time frames to give you an idea on the long term picture. Like on the pound Australian, we're bearish. So we know long term now that it's going down. It has the potential to give us, about, well, say, I think 200 or 400 pips going down to the 127% retracement. So now what you can do is if you want, if you're more of a day trader, you could look at the lower time frames like a 1 hour, 10, 15, and keep on training it down and use Elliott Wave on those smaller time frames too, and trade the smaller time frames to trade the bigger ones. But you're basically by doing Elliott Wave on the long term and the higher time frames, you're trading with the big money and you're trading with the higher time frames, so you have a higher probability of success. Does that answer your question? Okay. Any other questions? We've gone through pretty much everything. I really don't want to go through too much detail because a lot of the stuff they talk about in all these courses really does not make sense and does not work. So I wanted to pretty much have a separate section and show you that, you know, people teach you the ABC pattern, but it's really not a high probability success unless it turns into a full blown trend reversal. And the only way it could turn into a full blown trend reversal is first, this 5 wave has to stop at 127% or lower. If it doesn't, then it's not even worth trading the ABC patterns at all. Okay. No other questions? Okay. So again, just give it a minute. I think no one has any more questions here. Remember, join our Telegram chat room. We'll talk more about Elliott Wave there, Fibonacci, real bars, fake bars, money management, and everything. All the workshops up to this point, we'll be using those tools to trade the forecast trades there. Okay. And please be active in there. If you got a chart, you got a question about in the Telegram chat room, ask away. It doesn't matter what trading system you're using. We can pretty much give you an answer to everything. We know all the systems out there. Okay. Thank you, everyone. And I'll send out the link for the next workshop, which will be discussing moving averages and possibly MACDs too, and using that different time frames for different currencies and showing you how to take the most popular system, moving averages, and show you how to optimize it so that it gives you a better win-loss ratio and also a higher reward risk ratio. Okay, thank you. Enjoy your day.